Hey everybody, welcome to Trading Capital's daily analysis video. It is currently June 29th. I'm your head market analyst here, Curtis Scouten, jumping into the S&P 500. What a choppy, wild session. We were up, we were down, we were up, but eventually we just finished flat. So jumping into this intraday action here, you can clearly see that it was a clear chop shop. So essentially this is where we opened, had this nice run up pre-market, had a nice sell-off, which you were making now a series of higher lows, and then you failed to take out this high and you had a massive drop. And then you had a phenomenal rally all the way up, ran into your same resistance point over here, and then just look at the impeccableness of the sellers lurking here. You had sellers on one candle, two candles, 3, 4, 5, 6, 7 candles. The sellers were just lurking with all of these wicks being present. And then eventually you sold off, had a little bit of a pop, sold off again, rallied up, but overall you failed to take out the previous highs that was set on this candle here on that early pop into the light volume period. So overall for the S&P 500, it was a flat day. It did finish technically down by 0.08%, so really nothing going on there. The Nasdaq did finish up 0.09%, and the Russell was the lagger on the day, finishing down -1%. Let's flip to the daily chart on the S&P 500. Notice how on the S&P it is lagging the Nasdaq in the sense that, oh, let me just adjust this channel. Sorry, that's why my analysis is going to be slightly off. So let's put that there. We'll adjust that there. So the S&P is finding support in this channel. Notice how today we hit the low range of this channel and you did have a good reversal intraday. That was your bottoming tail that you put in there. So on an intraday basis, you do have a bottoming tail that is still technically intact here from this reversal. But in my opinion, there is this gap down here to the downside that should be filled potentially tomorrow. So since we're super close to that gap, I do favor that we get a little bit of a move down and then potentially a reversal up to maybe in the center point of this chop over here. But really it was a crazy wild swinging day. You tried having rallies and then they were failed and met with sellers, and then again another rally, it was failed. So overall very choppy, but it wasn't really too bad of a day for the markets considering now you're very close to this technical gap. I do favor a retrace back to that breakout zone before you can eventually stage your next run up. If we flip to the QQQ, the Nasdaq was interesting today because you actually got a bit of this reversal candle, and notice where you hit. We were talking about the Nasdaq having to hold this channel, and certainly it has held this parallel channel nicely. So you did get that initial dump out sell-off, but the Nasdaq was able to reverse the losses and it did close positive on the day. So a little bit of an intraday bottoming tail there. So pretty impressive to see. Let's just take a look at the Russell. The IWM was interesting as well because it has been lagging. But overall, look at this wedge formation where the confluence of these trend lines meet. And look, that was your clear support. It did coincide with a gap fill. Notice how the QQQ and the S&P are holding up better on a relative strength basis because they have not filled their gap to the downside, whereas the IWM, the Russell, has filled its gap to the downside, which leads me to think the Russell has now the better chance to rally versus the S&P potentially finishing lower. And if you notice the Russell, look at this gap fill over there, beautiful bottoming tail, and now you're just slightly stuck under this resistance trend line over here. But due to the fact that you hadn't confirmed below that trend line on a closing basis, so here was your breakdown, you pierced it, rallied all the way back up, reversed back down. Still, this was not a confirmation candle because you're closing with inside this wick. You had a dump out that would have potentially been a confirmation candle, but it was saved on a massive reversal, and now everything is pretty much trading inside of this bottoming tail, and the ultimate resistance is getting above this trend line and then eventually attacking this wide range red bar. But ultimately the Russell is in a good position to potentially rally, and there were a few things that we did today. And before we go over the trades that we did today, I just want to say impeccable call on energy. I mean, what a fantastic job. The likes of, we shorted Valero just the other day, at the 117, and look at this epic sell-off. But let's just take a look at this daily chart to show you. You had a beautiful retrace, and this is what we were waiting for and ready for. You did have the crude inventories that came out today, kind of surprised the market. So overall, oil has been taking a hit due to the fact that now traders are pricing in potentially quarter two contracting. And when you have a US GDP that was running at roughly, let me just pull up the numbers here. The US GDP in quarter four of 2021 was rising at 6.9% growth. That is exceptional growth. Obviously, it was fueled by artificial growth, stimulus, and quantitative easing. But now quarter one has contracted by 1.6%. So that's actually higher than the 1.2% that I had in my mind. So it's quarter one has contracted by 1.6%, and now it's likely that quarter two, come mid-July, will also contract. I think that's what energy is certainly displaying. If you look at the leading indicators like copper, that is also displaying that. But look at this reversal on oil. We were discussing in our videos for a couple weeks. We were looking for, because we netted a beautiful gain on the SCO short from this collapse on oil over here, and we were looking for that beautiful retrace, and we certainly got that retrace. And now look at this down day on oil. Oil collapsed, basically it finished down 2.09% on the day, but the thing about this is it was up a lot more. So if you simply measure the high to the low, that's a 4% reversal on oil. That is nasty. Going to the WTI, this is the chart that I prefer to use and analyze oil. Look at this beautiful trend line that we've been watching for a long time now. Again, that was your resistance. Getting through that, you broke above. You were looking for a confirmation candle to potentially continue a break to the top of this channel. You failed that confirmation candle with today's candle. And what's so special about this candle is this is an intraday bearish engulfing reversal candle. So on the daily chart, this has completely made a new high. It looked like you were going to get that confirmation. If you got that confirmation, the bulls would have had a strong case to go all the way up to test the top of this range. But the fact that the bears have taken control now on volume, a bearish engulfing candle states that you should go to the low range of the pattern. And since you've hammered on this pattern multiple times now, I do favor a move back down to this 84 level, especially if the declining GDP puts us into a technical recession come mid-July. And we're also going to get the FOMC mid-July, which you can be certain they're going to raise rates again. We know they're going to do it as a 0.5% basis hike, but there is the potential to raise it by 0.75%, which will certainly put additional pressures on the overall economy. So beautiful job shorting Valero, and nasty reversal on Valero. Down 6.37% on the day. So we just took this trade yesterday. We shorted at this 117 mark, and it's beautiful to see that we are already in the money over 7%. So fantastic job. And we also added to our SCO position yesterday and today at the pre-market. And look at this beautiful gain on SCO so far. So far, just from yesterday and today, we're in the money 5% on our oil short. So fantastic job calling the overall energy plays. I do think they're going to get hit. If we simply look at Dr. Copper, which is one of the best base metals to essentially analyze when you're trying to depict where the overall economy is. So on a daily basis, you had this massive, beautiful range that copper was trading in. This was your breakout attempt. A failed breakout sends you back to the low range of the channel, which is exactly what you got here. You got your retrace, your technical bounce, because copper was oversold from that. And now look at this massive, nasty collapse on oil. We have to really flip to the weekly chart. And why copper is so important is because copper is the most used base metal in the world. It's like oil. Oil is the most used energy in the world. So simply keeping your eye on copper and oil will give you a great understanding on the overall commodity market and where it's likely to head. And one of the things why copper is generally a good signal for is the overall real estate market, because a house requires lots of copper. So does the overall car industry. So it does depict and give you, and it encompasses as a good barometer for how many different sectors will do over an extended period of time. So the thing that I'm watching on copper is you had a weekly close break over here. This was your weekly breakdown. And then you were looking for your secondary confirmation breakdown, which you got clearly. So copper has now technically broken down on a weekly basis key support. You are into a little bit of support here, but don't underestimate the power of a falling GDP and a recession, a global recession. It will certainly put pressure on copper. I have it priced in that copper will go and test these pre-COVID highs over here, or sorry, your 2018 highs, and then eventually I do suspect it goes even lower than that. I could potentially see some sort of a retrace, all the way back down to these levels, somewhere on this trend line over here. And copper is one of the best signals to use because it is in so many sectors. It's involved in the largest asset class, which is real estate now. So it gives you that great barometer as to what's going on. Natural gas had a little bit of a reversal as well. You were looking bouncing up. I was eyeing up natural gas short around the 7.15 level, but unfortunately it didn't want to pierce that 7 mark. Lots of sellers have stepped in. On the plus side, the one thing about natural gas is it didn't completely engulf this candle, and it didn't engulf the volume. So it does suggest that there is potentially more upside, and we could potentially still get a short trade on natural gas. But for now, it's just you got to leave it alone. There's really no trade set up, in my opinion. Let's discuss gold for a second and the US dollar. Gold is still stuck in this wedge pattern. It's really moving very, very slow, still holding this this range over here. You can see that it pierced this wedge pattern over here, but it was saved late into the day. One of the reasons why gold is still impressing me is look at this surging dollar. This US dollar has had a powerful move, which is displaying the fear in the market. That's why markets were overall under pressure most of the day, because a rising dollar generally means people are looking for cash. And this is the DXY, so it's a little bit skewed in the sense that it's measured against only 6 other G7 countries, or 6 other 7 countries. And obviously when you have Japan in there, who's buying bonds left, right, and center, who's now the biggest, who's now owns more than 50% of their bonds, that is slowly inflating their currency away, which strengthens the US dollar in this basket. So obviously the DXY, there's a lot of algorithmic trading around the DXY, and it will put pressure on gold. It was interesting to note that the US 10-year finished basically, it was down on the day. So it's interesting to note when you have a falling 10-year but a rising DXY, it generally means that there's a lot of other uncertainties happening in the Eurozone, happening in Japan, that are strengthening the dollar. So typically the dollar will rise as rates rise, but in this case the rates were falling and the dollar was still rising, which means that there's probably some geopolitical uncertainties in other G7 countries that are taking more precedent over this correlation. Let's take a look. So today we were pretty active. Along with adding to our SCO, we also accumulated 3 longs. So we've been in all 3 of these longs before. And let's just go over them over here. So the first one is Carvana. We've already traded this one about 3 or 4 times. We've made profits on each time. So we're going back to the trade again. One of the reasons I like this is because now you've had this beautiful retrace. I believe we just sold it a couple days ago, 1, 2, 3, 4 days ago up here around this 28 mark. And now it's retraced back down to 23. So I issued an alert to buy it at 2020 or 22.50, this blue line over here, and you can see it's already had a beautiful late day bounce. If we flip to the intraday chart, Carvana does have a nice little bottoming tail on the 30-minute chart, and you can see you've had a beautiful, beautiful increase in volume. It was a bigger on your last candle here, it was a bigger buying spree that pretty much negates all of the intraday volume analysis. So it's good to see that Carvana is finding some support. This is a starter position. I am not afraid to accumulate a little bit more, as we only started off with 1%. You do have a key technical gap fill that I do think will get filled at some point in time. But the fact that we're starting a position here with potentially bringing our average even lower than all of the other previous times we've scored on Carvana, this just shows that we can rinse and repeat trades, and just knowing how the stock moves is going to position us on the right side of the trade. We also added or bought Sofi today. One of the reasons I like Sofi is simply if we pull up the chart over here, flip to the daily chart, Sofi is still having this, basically all of this bullish, the macro trend is still a downtrend. However, the thing I like about this is that you still have this bullish inside bar consolidation. And one of the reasons that made me buy this stock today is you filled the key gap over here, but you had this initial sell-off with this reversal bottoming tail over here. And then price action tried rallying up, failed, came all the way back down. You still didn't take out that low. And then you rallied all the way up again, failed, sold off pretty hard on dire market fundamentals. There was weak market sentiment over this last few days. And the interesting thing is that you're still holding this initial bottoming tail from earlier June. And the fact that you sold off, you did technically make a new low, but you reversed back up and created another intraday bottoming tail. It just shows me that there are buyers here, there are buyers here. This is a good technical level to add because it is displaying decent buying pressure. And when you actually look on a weekly basis, Sofi is still holding that weekly bottoming tail, which is very impressive. And you can argue that you've had this initial breakout of this downsloping channel, and you just got the retrace back to this parallel. So here was your retrace, your breakout. You kind of failed, and now you've got your secondary retrace to the back to this downsloping channel, which I do think will be a good opportunity to buy. Also, you've had a very healthy retrace of this monthly bottoming tail. So we have one more day left. It's very unlikely that you're going to supersede this volume candle on Sofi. So it does show that there are buyers willing to hold and protect their positions by adding to more and obviously dollar cost averaging and inching in. So definitely buyers are present with Sofi here. And one of the beautiful things is that Sofi reported really strong earnings over here, and we did play this pop, and essentially this was a massive gap up on Sofi because it had stronger than expected earnings. So if the company is reporting strong earnings in the current environment, when all of these other companies like Netflix, Apple, Amazon were all getting shredded, and they're reporting strong earnings because they've been so decimated in terms of their valuation, then this does provide a good a potential profitable trade. Nothing's a guarantee, but that's why we start off small, put ourselves in the position for that mean reversion bounce, and still technically Sofi is way oversold on the weekly chart, monthly chart. I mean, simply, I don't use the RSI a lot, but the RSI, look at this oversold level. I mean, you've just had the slow bleed all the way down, and now you're trading at decent valuations that make this company very attractive, especially when they're reporting decent earnings. So we'll just have to monitor Sofi as we go. We also added or bought STNE. So we've traded STNE a few times as well today. And essentially why we bought STNE is because you've had a nasty 3-day sell, hard sell. We bought it just under $8, and STNE, StoneCo, is giving us that exposure to that emerging market. I do like the fact that you had this hard sell-off. You still have a technical gap fill over here that could come down and get filled, but essentially you've had this hard sell-off. You were unable to take out this trend line of support over here, which is your overall, your downsloping trend line that was keeping you intact until you had a nice breakout over here, and now you've retraced back to the original breakout zone, and this trend line is probably off just slightly, but you've had a nice retrace. You've held this low over here, and now you're looking to put in a bit of a reversal candle. And StoneCo is in the Brazilian market, so it is giving us that exposure to the emerging markets. And this is a company that is also, been popping on strong earnings. Over here it had really good earnings. It popped, and it's just been decimated as the market fundamentals have turned weak on us. So you can see that we're already in the money on StoneCo. Slightly, but it was a beautiful pickup over here at the 797 mark to potentially move a lot higher on StoneCo. So where do I see this stock potentially running to? Honestly, your next point of resistance will be getting through this red bar high here at 883. If you can get through that, I honestly think you test this downsloping resistance level, and that's above $10. So that could be a substantial amount of profit if this stock gets a bid. So overall, it's very surprising that the markets have had 2 down days. Arguably today was a pause day, but it was a very choppy, wild session. There was a lot of red on the screen across the board. So you are getting into that aspect where the markets in the short term are a little bit oversold, and you could argue there's a potential technical bounce coming. And typically light volume does favor upside and upside float in the markets, but that's not what we've seen over the last 2 days when that extremely light volume has been present. So it'll be really interesting to watch how we close the week, because that's essentially going to dictate, are traders in more of a fearful state where they're not willing to hold stocks and equities over the weekend, the long weekend, or are traders now in the market a little more confident, we have clarity, and they're okay with holding over the long weekend. So time will tell. I do think we're accumulating decently valued names at major technical levels, which will obviously put us in the position to profit if we get that technical bounce in the market. Overall, we still have many shorts on the table, which, like energy again, I think will pay us handsomely. But in terms of the tech plays and the other companies that have been beaten down, 75, 80, 85, 90% from the highs, I do think we get that technical bounce in the markets. That's it for today. Hope all this analysis helps. Good job on trading today and adding at key levels, and especially watching that oil trade come in nicely. That is still a really amazing call. We'll just have to continue to monitor things as they go. Please give this video a big like down below, or a comment on any extra analysis that you feel would benefit you. But overall, thank you again for being